Hello, welcome from Trend Signal, where we are reviewing the data and events of the week beginning the 13th of February. Weekend news was quite interesting. Despite a North Korean missile test, the markets reacted moderately positively to another record-breaking move in the US, a grand slam as it's been described, which is the NASDAQ, the Dow, S&P, and the Russell. The Russell have been Russell 2000, which is the index of sort of smaller cap stocks, have been lagging the main indices, partly because the Russell 2000 had done really well in a run up to the end of the year, but it's sort of been backing and filling a little bit. But Friday, a big day for the Russell 2000. All four indices reaching record highs, a grand slam. Markets, well, FX markets are generally quiet actually. The yen weakened a little bit following the GDP data in Japan, plus 0.2%, expected plus 0.3%. But the dollar remains relatively flattish. No positive reaction to the North Korean news, really, which you might expect to see some sort of flight into dollars. Generally, Trump continues to encourage the markets. Talk of massive tax cuts, phenomenal tax cuts. Here's a comment from MarketWatch. Trump says phenomenal tax announcement in coming weeks. As we've always argued here, that the protectionist and isolationist sort of strategies of Donald Trump are the ones that have come to the fore early on in his presidency. But any tax cuts, whether corporation tax cuts, individual tax cuts, they need to go through Congress, as it will require an increase in the debt ceiling. That is all going to take time. Back to the markets. As I said, Australia Far East generally firm, in line with the Grand Slam record close on Friday evening in the US. I guess European markets have got additional things to deal with. The Greek refinancing and the IMF's criticism of the funding plans. We've got French elections, we've got Dutch elections. The French elections, obviously, the more important. Marine Le Pen factor, or as she likes to be called now, just Marine. Talk of exiting the euro if the Front National don't get some sort of revised eurozone, which in effect means a massive technical default of French bonds, because any Front National government would go back to the franc and denominate the majority of those bonds in French francs. Japan firmer due to the weaker yen, but also the surprisingly positive state visit to the US by Shinzo Abe as Trump rolled out the red carpet. And as most papers pointed out over the weekend on Monday, Trump and Abe hit it off. I think Trump's having to do a bit of backpedaling, as he has done in the past with comments he's made in the electioneering process for the US presidency, but he angered China over his stance on Taiwan when he called the Taiwanese president, and he also upset Japan during his electioneering with talk of massive trade tariffs on Toyota cars, etc., etc., and obviously other Asian allies as well by withdrawing from the Pacific Rim trade deal. I think he did that on one of his first days in office. But as we've seen from Trump, his strategy, he tends to be happy to reverse his position and pledge to honor the one China policy. So that rather pleased the Chinese. Gold had a good run up. The dollar slipped over the previous week, but I think that tables have turned slightly as the dollar is recovering a tad. Gold still remains firm, but it's off its peak. I think last Wednesday it hit 11.45. Geopolitical risks remain, underlined by the North Korean news overnight, but gold's initial move was partly down to geopolitical risks attached to Trump's protectionist policies. But I'd say the pullback remains quite modest, bearing in mind where it's come from. Oil is an interesting market, stuck in quite a narrow range. We just have a look at UK oil, we can see on our chart here we're really stuck between a 57, 54 range, been there since the beginning of the year. Many hedge funds remain long. It's a crowded trade, playing the OPEC trade, but positions starting to be trimmed. News that US producers last week extended the biggest surge in oil drilling in more than 4 years. And that's as a result of OPEC's production cuts and the increase in price. Anything above $50 is enough to encourage a lot of the shale oil producers. So funds re-evaluating some of their exposure, and also data that came out from the Energy Information Administration that U.S. crude output climbed to 8.98 million barrels a day. Contrast this with 5-6 years ago when it was sort of 4.5. And I know expectations are for crude production in the States, which increased by 500,000 barrels a day from last year's lows. The Energy Information Administration is expecting U.S. production to reach 9.53 million a day next year, and that's the most since 1970. Not good if you're a dollar bull. Data this week, let's have a look at the calendar. Another lightish calendar again this week. As always, the unscheduled events, the Trumpisms and Brexit turns tend to create the greatest flux, really. Trump immigration ban still bubbling away as he looks to issue another executive order, I think in an attempt to try and get around the Court of Appeal ruling. But the data this week, it's inflation, Chinese inflation, but the key ones for us, certainly here in the UK on Tuesday morning at 9:30, UK inflation CPI data, it's referred to as 1.9%, very close to the 2%. That is what happens as a result of the collapse in the value of the pound, causing a lot of imported goods, their prices to rise, getting very close to that 2% target. We also have Janet Yellen speaking this week, the chairperson of the Federal Reserve, the U.S. Central Bank, testifying to Congress, to the Senate Banking Committee. Happens twice a year, testifying on Tuesday at 3 o'clock and then again on Wednesday at 3 o'clock. The text of her speech or testimony is released beforehand, but they do have a Q&A session, and that can be quite interesting for the markets. We then have U.S. Consumer Price Index, inflation data for the US, very benign in comparison to the UK, plus 0.3%. I suspect if Trump gets his way, that will start to tick up in the months to come. But for now, the core rate, which we should have focused on, is actually plus 0.2%, unchanged from the previous month. Crude oil inventories, in light of what's going on with crude oil and the massive build in stocks from the previous week, maybe some adjustment there, but the concern that the US is increasing production obviously may start to weigh more on the markets, although it hasn't actually affected price too much at the moment. So crude oil inventory is up 330 on Wednesday. And then on Thursday, we have the fully fed manufacturing index, the Philadelphia region of the Federal Reserve, a very important region for manufacturing. So that reading, I understand that that's going to be an increase from 23.6, I think 24.5, although they don't have the forecast actually here on Forex Factory. We then have, to end the week, our retail sales here in the UK. A very poor one from the Christmas period, minus 1.9%, but we're expecting a tick up in that positive number to be reported. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.